Recessions necessarily change the spending habits of people. In a recession, there's typically not a lot of money for much else. With fears of a recession growing, many investors are now searching for companies that might perform well during periods of economic downturn. Recession-resistant stocks are stocks of companies whose products and services consumers will continue to purchase no matter the economic climate. In a slowing economy, consumers will generally still fill their prescriptions, seek medical care, practice good hygiene, and need food to survive. They'll also continue to pay for running water, electricity, and gas to heat their homes, even if they increase in price. These stocks have performed better than the broader market during the 2008 meltdown and the 2020 crash. However, past performance is no guarantee of future results. But there's good reason to think these stocks have what it takes to keep a portfolio on track during the next recession. Consumers typically pull back spending on discretionary or luxury purchases during recessions. But they will continue to buy necessities. Consumer staples, including food, toothpaste, soap, and shampoo, enjoy a steady demand for their products during recessions and other emergencies, such as pandemics. With $80 billion in annual revenues, Procter & Gamble is one of the world's dominant consumer products companies. Leading brands include Tide, Pampers, Gillette, Head & Shoulders, among many others. The company was struggling with organic growth. However, in the mid-2010, the company refocused itself. It unloaded dozens of weaker brands while doubling down on its top products. This paid off in a big way once 2020 hit. Companies' focus on cleaning and hygiene products, in particular, delivered. Regardless of what is happening in the world or the economy, people still want to buy soap, diapers, razors, laundry detergent, and other such everyday goods. With 66 consecutive years of dividend hikes, it's a stock investors can count on for rising income even in a recession. The pharmaceutical industry enjoys some recession-proof elements. People still need their life-saving drugs regardless of what the economy is doing. The company has a wide-ranging portfolio of biopharma drugs that treat breast, prostate, and skin cancers. Most of the medicines in oncology portfolio are steadily growing in revenue and profits due to their patent protection. Gross margin for the company's biopharma portfolio has increased from 20% in 2019 to 38% in 2021. Much of the gross margin improvement in 2021 came from Pfizer's vaccine. Though many investors believe that the vaccine sales will fall off in years to come, it won't likely be this year. Pfizer anticipates revenue from the vaccine will reach $32 billion in 2022. But that wasn't just a boost from the vaccines. Pfizer also performed much better than the market during 2008. Walmart is quite possibly the ultimate recession-proof business. That's because its stores are based around selling essential items, such as food and personal care products at affordable prices. People may forego luxury shopping for an extended period, but have to pick up bread, toothpaste, pet food, and other necessities with regularity. Whether they're going to the store or shopping on Walmart's e-commerce site, they may end up buying some other discretionary goods as well. Not everyone may love shopping at Walmart, but few retailers offer more value for the money. Walmart stock has gotten hit over the past quarter as it has lowered its earnings outlook. Walmart shares arguably were aggressively valued before, but after the latest decline, they're now at about 20 times forward earnings. People cannot go without electricity and gas, even during recessions. As a result, this high-dividend stock from the utility sector could be safe havens during a prolonged downturn. Duke Energy is one of the largest providers of energy in the U.S., delivering electricity to nearly 8 million customers and natural gas to more than 1.5 million. It produces about $26 billion in annual revenue and trades with a market capitalization of $83.8 billion. If you're looking for income, Duke is a good choice with a 3.74% dividend yield. Similar to consumer staples, healthcare companies tend to be safer during recessions because of the constant need for the products and services they provide. Businesses in the biotech, pharmaceutical, and healthcare equipment industries, as well as healthcare suppliers and services, are included in this sector. It provides healthcare and insurance products and services. Its Optum business offers technology and data-enabled healthcare services. Recently, the company announced excellent results for the second quarter of 2022. Earnings grew 18.5% year over year to $5.57 per share, beating the street's estimate of $5.21 per share. Revenues increased 13% to $80.3 billion, driven by double-digit growth at both Optum and United Health segments. According to FactSet, the consensus revenue estimate stood at $79.7 billion. McDonald's was one of the best-performing stocks of major blue chips in the 2008 financial crisis. It also bounced back quickly in 2020. The reasons are quite similar to that of Walmart. When the economy goes south, people care less about more intricate flavors or elaborate menu options. If the focus is on getting a tasty, filling meal at a low price, McDonald's scores high marks. As consumers economize, McDonald's benefits. There is another hidden driver that protects McDonald's uniquely during recessions. It owns a ton of its own real estate. In fact, some analysts have joked that McDonald's is a commercial real estate company that flips burgers on the side. Owning tons of quality real estate around the world protects McDonald's balance sheet and keeps costs down during hard times. Additionally, during inflationary periods, the value of McDonald's land holdings shoots up.